First of all, I want to thank The Economist for once again organizing a, landmark conference, bringing great speakers and stimulating important discussion on topics not just for Greece but for the world. So, congratulations. Now, turning to the question, the Greek economy picking up speed, and what can banks do? Just a few remarks first on the Greek economy. Greece has experienced a fourth year of economic overperformance relative to the euro area. More importantly, the recovery is maturing, becoming more sustainable, and growth is more broad-based. There exist several important growth catalysts which should support robust growth in the years to come. Let me just mention a few. Backloaded RRF-related capex, a strengthened labor market, as mentioned by the minister, steadily improving fiscal position, recovery in the euro area with monetary policy beginning to normalize, a competitive economy capable to attract foreign investment and to gain export market share, and finally, an underleveraged economy with a healthy banking sector which has the capacity and the desire to finance investment. Investment, it's key. It continues to accelerate despite the restrictive monetary policy environment. FDI remains strong, and in 24 will be at a record high, close to 3.5% of GDP. R&D spending is a great part of investment, which increases the quality of investment. And we've closed the gap with the EU on R&D by 50% in the past few years. All in all, the consensus has confidence in the short-term growth prospects of Greece, and rightly so. However, real convergence to EU, which is our goal, still needs significant effort. Increasing long-term growth potential while achieving a balanced and inclusive path of economic development is far more challenging task, requiring significant structural change, as the minister has already mentioned. Let me say a few words on the role of banks in this effort as I see it. Banks historically play a key role in linking macroeconomic progress with microeconomic decisions, optimizing capital allocation. Currently, Greek banks are in the best shape ever, I dare say, and are well prepared to redefine their role in the ongoing economic transition of the country. Let me be specific. First, Greek banks are outperforming by far on conventional metrics. They have strong capital and liquidity positions, buoyant return on equity, and non-performing assets close to EU peers. They are performing their classic financial intermediary role successfully. Specifically, net credit flows have been equivalent to 10% of GDP during the past 4 years, outperforming the euro area average by a wide margin. In fact, according to the ECB's SAFE survey on the access to finance of enterprises, the financing gap of businesses is at its lowest point since the beginning of the Greek crisis, while the ECB Bank Lending Survey points to pre-crisis highs in loan approvals ratios for households. Moreover, Greek banks have already successfully allocated nearly 1/3 of RRF loans, that's 18 billion, approved for Greece. Finally, the financing of many complex projects has surged, leading to the upgrade of critical infrastructure, as well as a plethora of large energy projects, helping Greece become a regional energy hub. But the new model that Greek banks are aiming at is more ambitious. Greek banks aspire to play a bigger role in shaping a more competitive, but also knowledge-based and inclusive growth paradigm. Their own transformation, achieved during the decades following the economic crisis, provide a roadmap for how to manage change for their clients and for the economy as a whole. Again, let me be more specific. Banks have been at the forefront of prompting the use of cashless payments, leading them to increase rapidly in a very short period of time, up by a factor of 9, with such payments now exceeding the European average. Importantly, the use of cashless payments has played a significant role in reducing shadow economic activity and tax evasion. Second, banks have made unprecedented IT investments amounting to several hundreds of millions of euros per year to modernize their infrastructure, to digitalize banking services, thus leading to the digitalization of many of their clients and the economy. We have upgraded our human capital in order to meet rapidly evolving corporate customer needs. In fact, it pains me to say that we are becoming a source of hires for much of the other sectors of the economy. We have encouraged SMEs to seek formality and undertake healthy expansion plans. We have promoted financial literacy to help individuals make informed investment decisions, overcoming the risk aversion due to the past experiences from macro instability, thus increasing savings as well as encouraging more efficient wealth allocation. Finally, we're playing a leading role in ESG adoption as an accelerator of energy transition, prompting our clients to adopt emission-reducing projects. To conclude, the economy is at an important turning point, shifting from recovery to structural advancement. Envisaged government reforms will play an important role going forward, but the private sector must pick up its game and restructure the way it operates, and I believe the Greek banks are well advanced on their journey and will be change leaders in the years to come.